quite a few must be bankers, and there are others also, but most of the time you must be familiar in tracking what economic times, more specifically, if I had to mention a media or a paper, almost for more than 2 years, every day there will be a specific page on which AI related information is being presented continuously. Because that clearly gives the indication that what's the amount of interest that is being generated among the readers, wider public. If you look at the last few weeks, most of the time, the earlier, as I said, 2 years, the articles information was positive, always been positive. What is possible by AI? In what way the AI can help different application usages and blah blah. But in the recent times, it is negative, and they are highlighting quite a bit of accidents that has happened attributed to some type of usage of AI. More specifically, the health related indication where people, youngsters, are led to commit suicide. This is the kind of information. Today it is just trickle. Last, as I said, because it is in a recent time only. But if it happens to be increasing over the period, then it is definitely going to get adverse attention from wider political economy attention. And it will be adverse attention. When the adverse attention comes, then the restrictions and other penalties that come along will also be very severe. We have seen that happening in other type of, especially in the banking sector, microfinance, when they went overboard in a particular period. Because the entire from mid 90s onwards up to 2010 or something, it was growing like anything, but they went overboard. People started treating them, or other microfinance institutions started treating them badly. Then it led to some kind of this kind of extreme commitment of suicide by people. Then it got a very big heavy hand from the political authorities to stop them or prevent them from doing further damage and nothing. So that is why it is very critical. I am very happy that UNET has thought about the appropriate caption for the discussion today. That is navigating the AI frontier in BFSI, unlocking potential, that is positive side, mitigating risks, and building essential guardrails for a secure and innovative future. That's all. That is why my thoughts are what I am going to share relates to these guardrails. Why this is important. This background, please keep in mind when you, as you go along listening to my discussion. So now, over the period of human history, technological changes used to come very often, right from the days when the fire or the wheel has been invented. Over the period, several other inventions, technology inventions have happened. And in recent times, more specifically based on ICT, that any number of technologies have come up. And more specifically for the banking and financial sector, which has created quite a bit of real tectonic type of changes at that time. Today it may not look that many change, but as and when those things came, it used to be a big one. How those changes, as and when I'm going to talk about Indian experience, not experience elsewhere. So in India, how when BFSI sector, more specifically the banking sector, adopted the technological changes, and how the regulators had kind of a hand in it, guided them or controlled them or whatever. Some examples I will first put before you, because this is important to realize the ethos or the rationale behind regulatory action. Then you will be able to appreciate what kind of regulatory approach is likely to be coming in relating to use of technology in the BFSI sector. Today, there is not yet a clear or full-fledged regulation is there. Certain recommendations have come from the committee. I will refer to that. And then how to look forward, going forward, I think. Okay. Now, as I said in the history, the pre-reform period, the pre-1990s, at that time, the whole technology was completely new to India, in the sense that until that time, no bank has really used technology. It was all from foreign countries. When at that time, heavy opposition was also there from the unions against use of technology. So the regulator took the role of promoting, being a catalyst for making the regulated entities use technology. That time, what's it, Rangarajan Committee 1, Rangarajan Committee 2, they gave quite a bit of recommendation. Based on that, every bank was asked to adopt technology. It was actually enforced by the Reserve Bank on the banking system to adopt. Post reform by 1992-93, when Reserve Bank gave licenses to new private sector banks, at that time it was clearly put as one of the conditions of the license that they should use technology from day one. That was a very thoughtful idea Reserve Bank had put in, that they realized that it is required that way. So all the new private sector banks started from day one using technology, demonstrating. Once they have started demonstrating the ability that the technology can offer, then the rest of the banking system, public sector, and also started using it. From that time onwards, Reserve Bank shifted, the regulator shifted its focus from being a developer or catalyst to regulator, being a pure regulator. That's why when the core banking system came in, it started telling the I'm going to be technology neutral. That is, regulation will be technology neutral. You bring in this technology, CBS or the standalone system or whatever, all those things are fine, but you can adopt any kind of technology. But ultimately, I want these things. That as a regulator, I will only ask that there has to be books. When I come, you have to show. I will check what. Then banks went and started adopting channels, different types of channels, whether it is a card or ATM or later on mobile, internet banking, blah, blah, all those things came. Then the regulator started more heavily paying attention, more heavily on consumer protection, customer safety, privacy issues, data issues. So the regulation started shifting focus away from to performance and safety and security of customer transaction. That's why that debate started. Best example will be the our two-factor authorization. That is one of the things, because it considered that it is creating large scale for a country like India, where the people are not very adept in use of technology, but their protecting their interests is much more important rather than the convenience or the cost of providing that service. So despite its high cost at that time, two-factor authorization considered as a high-cost affair for the banks to bring in. But Reserve Bank was very clear that no, you have to do it. Today, it is a leader in the world, that concept. That is because of we started like that. I think that's why. So slowly the regulatory focus went to safety and security of transaction, customer protection, and related issues. Then another next after the next example will be relating to cloud. When the cloud technology came in, again there was a issue because Reserve Bank at the time took a clear call that we will not allow banking system to use it, because the data is not going to be here in India, it is going somewhere else. That means we don't have the confidence and trust that the data will be fully protected, or we do not know at all. When I don't know, I don't allow you to do. So when entire rest of the sectors other than banking and finance sector started using heavily depending upon cloud-based operations, Reserve Bank was very clear that no, I am not going to allow. That finally what happened? When technology further developed, cloud technology further from the public cloud to private cloud, and then it became easy and visible to establish before the regulator that now the data localization is possible using cloud technology. It is available in India. It is not elsewhere. If you want to, whatever supervisory considerations you want to have, and I think it is available there, then it's allowed that. Yes, now you can use technology. So that is when appropriate risk mitigating technology was available, then it was allowing the things to go ahead. Then next technology is our BCT and DLT. When it came, At that time, it was actually not the technology. What was projected more was the product out of the technology. There's a Bitcoin and cyber related payment instruments or whatever. So at that time, because the projection was on the product, not the technology. And the Reserve Bank could see very clearly, not only Reserve Bank, many countries, many regulators also could see it, that it is likely to create large scale damage. Then it created a big ban. No, you cannot use it at all. Don't use it. Then the technology evangelists started to propagating and approaching Reserve Bank and saying that why you are blocking the okay product you block, but the technology, underlying technology, it can be used for very positive purposes. Why don't you allow that? So that there again, yes, it was clearly mentioned. Okay, you can start finding alternate use of this technology. That is okay, but not the products which were earlier propounded. So that way, by over the period, if you would find that sometime it was binary decision, allowed or no, not allowed. Then it was something intermediate. There is some risk mitigations available. Then we allow to that extent. Something which is safer, then it is allowed. Like that, regulatory approaches have always been. Today, what has happened? That people have started using AI. By BFS sector and banking is also in the forefront in using whether it's AI or Gen AI or what's that next level agentic AI. So there are quite a bit of interest in using this. So here, what is the approach a regulator should be taking? Earlier, is that it used to watch, stop until everything is clearly established. Thereafter, only it used to be let. Now the approach has changed. It has created, it established a new committee. The committee had come out with quite a bit of recommendations. What should be and what should be the guardrails, and I think they have set of recommendation. We'll deal with it a little bit later. But the approach only I'm saying now, until this AI, all the technologies were initially tested elsewhere, typically in the Western world. It had showed it already there is a track record of what that technology was doing, was capable of doing, what kind of trouble it can make and other thing. So that way, when it came to India, it was by some clarity was available or some hesitation Reserve Bank was able to exercise, saying that this can be done, this cannot be done. Whereas in AI, this time, it is not that it is happening only elsewhere. AI is being used, and India has such a large technology pool available. Companies are creating more and more AI tools. Then it becomes it is available parallelly. It is not that sequentially after it is fully tested elsewhere, tried and tested elsewhere, then only it is coming to India. No, it is parallelly it is happening. That means innovation is happening here. Then we have to be positive. We have to encourage innovation. The country needs, and then the regulator also has to take a clear path while encouraging innovation. How do we put the track right, guardrails? So that is why this committee's report, if you look at from this perspective, it is a new approach where parallelly both in supporting innovation and parallelly also ensuring that appropriate risk mitigation and other guardrails are placed. That's the way this committee has come out with is their recommendation. So that part, that's what I wanted to highlight. And this committee, as most of you must have looked at it, so it was clear. The committee's recommendation itself says it is for responsible use of AI. One is by enablement, that is another one, free. That's what I said, a framework for, that's a full name. Yeah, right. Framework for responsible and ethical enablement. So innovation should be enabled, but it must also be used responsibly by in the hands of the people whoever is going to develop or use this set. So that's why that they have talked about 7 sutras, 6 pillars, and 26 recommendations. All of them boil down to this thing only, that it is whatever needed for innovation encouraging innovation. There are several recommendations which it says that Reserve Bank should be adopting it, and they are clearly establishing that the parallel responsibility, ethical use, those things also to be parallelly be going. Now, what are the certain specific recommendation which has come in the report? As I said, that it is not yet adopted by the Reserve Bank. They are yet to become part of regulation. But Reserve Bank has gone always by the practice that most of the recommendations by the expert committees, whenever it has established, it has always been adopted and implemented. Very rarely that certain recommendations might not have, but in general, we can believe that these recommendations will become regulation, part of regulation. So now, for fostering innovation, what's the kind of recommendation they have made? One is that there should be a shared infrastructure, establishment of shared infrastructure to democratize access to data and compute. The creation of AI innovation sandbox. Sandbox, yes, everyone clearly would say that it is needed and other thing. The first part, because some technology companies are here, where I am not very sure that whether you are going to fully support that idea, it should be a shared infrastructure. Shared infrastructure from the public perspective, from the regulator perspective, and the user's perspective, it is good. But as a company who are in this business, you may not necessarily be liking that. But that is one issue. But that's a recommendation of this committee. Next one is indigenous financial sector specific AI models. Because the committee recommends that models which are used for other than BFS sector may not automatically be available. Where even though AI group is saying that AI tools can be used across any industry, but this committee's recommendation is that there must be something which should be specifically developed for banking and financial sector. Then AI policy to provide necessary regulatory guidance, that's all in the normal part for course. Then sharing of best practices. There again, yes, as a public policy requirement, this is a very good requirement that there should be a kind of repository where or there should be some centralized unit or serving institution which should help generate complete database on best practices and make everyone follow that. So that is a recommendation. Again, as a innovating entity, you may not necessarily like it because you would want your USP is to be different from somebody else. And until that time, you have got full benefit out of that early mover advantage kind of thing. You may not necessarily like to share it to rest of the people, but as a public policy, that's need to be negated. That's one. Then a more tolerant approach for compliance. That's a very important one from, again, from your perspective, the technology, and even as bankers, they would want this recommendation. They would like it very much in the sense that because it is a new technology, there could be damages, there could be accidents. There should be a tolerance by the regulator for the mistake that, because it's all in good intention. We have taken enough care. We want to establish, we'll establish that all the care has been taken. But despite all the care, some accidents have happened. In that case, it should be, regulators should be tolerant of that. It should not straight away come heavily as a supervisory punishment, penalties, and I think should not be there. That's a argument. This is certainly a regulator may have some hesitation to accept it wholeheartedly, but definitely because it is publicly demanded through a committee, I would expect Reserve Bank to adopt that certain leniency in terms of allowing damages not being punished too harshly. So that's a thing which we can expect. Now, on the risk side, the standard recommendation which is always available, that the board approved AI policy. Now, anything and everything, the regulator says that the governance starts from the board, so board should be fully involved right from beginning. Then the policy tone should be set by the board itself. Regulator will come as a second step or even as a third step. That's what they say. The first board should set up its own governance framework. Then you will have internal and external assuring authorities like auditor or others who will certify that you followed those guardrails and you are adopting the best practices, and wherever there is a deviation, I think that is recorded, and thereafter the regulator would come or supervisor would come and supervise. So self imposed uh, responsibility, not a regulator imposing something and you have to simply follow. That's the thing which is being recommended by this committee. Then the product approval processes, consumer protection framework, and audits that I mentioned already. Cybersecurity, that goes without saying, because now that is definitely a much more important or a serious risk that everyone has to be fully. Committee has also recognized that and says that appropriate things should be done. And next one is the governance framework across the AI's life cycle. It is not that only at the time of introduction while picking up the appropriate AI tool, that alone is insufficient, but as it goes, as it uses, as it modifies itself, because that is what AI is capable of, then continuous um, testing of the AI tools based on the general principles about the responsibility, ethical usage, and I think will also has to be there. So that is the thing. Then finally, consumers must be made aware of the implications of using AI, where all it is being used, and what's the kind of. That's where again that is going to be a big challenge, in the sense that this is a kind of double-edged weapon. In the sense that the more the consumers, first of all, it is going to be a big task to make customers aware of the power of AI and where it is being used. Is it properly used? And I think that convincing, until they actually get into some accident, they won't realize the full impact of what they have agreed to on the dotted lines or whatever. But whenever anything happens, then where they start raising objections, and they will start canvassing for the outside support, then the things become different. So it is going to be a little bit tough on this aspect. But because again, learning from experience, like derivatives, when it was allowed and it was being misused or missold, and I think then later on it became a big issue. Court and other kind of thing also came into the picture. Is one caution area where both the sides, whether it is users or the providers of the service, will have to be looked at. So that way, the vision that the committee has recommended is the financial ecosystem, where the encouragement of innovation is in harmony with the mitigation of risk. So both have to parallelly be going right from beginning. It is the recommendation is that let both happen together. Don't wait for complete what's it? Test it elsewhere. Afterwards, only you allow that. Don't do it. Let us do it together. Let regulator watchful eye be always be there. Let there be a sandbox. Let there be a set of comfort being given for tolerating damages or mistakes, genuine mistakes. And I think this is the way they have recommended. So going forward, with all your support, I would think that regulator will also be adopting this for full and good use of the system across everybody. That's one. Then these recommendations are contingent on quite a few things. As I said, that the RBI's willingness to tolerate non-compliance. That is a very critical one for the success of this possible regulation. When it comes, it is there, and you should encourage local innovation. Both things Reserve Bank should be. And the committee also recommended that there should be some fund created for supporting the whole segment to flower into innovation, recognition of awards, and support system that also it has recommended. Then there is quite a bit of caution the committee has actually recommended, and this Reserve Bank should be cautious in doing. There is Typically, AI systems are opaque. It is not explainable. So they were people general defense that are likely to do that. We have developed the system and other thing, but finally, when anything has happened, we are unable to explain how that has happened. If it has led into, for simple example, in the financial sector will be loss of money, loss of capital, or investment that the person has meeting, because the AI tool let him to do that way. It is equivalent to Harakiri, that is suicide by the what's it, our medical that counseling tools let that. The similar thing in the BFS sector will be loss of the money by the investor or the depositor and other. So how are we going to explain to the party that this happened despite all our precautions that we have taken? It is not deliberately we led you to this. That explainability, that is going to be a challenge. But there, it says that regulation should insist that explainability will be on the shoulders of the provider. That how that is going to be done, we need to be watching out. Then trust is a guiding factor that everyone knows. That anything to do with finance and then more to banking, trust is the start of the whole foundation of the relationship between service provider and the service receiver. And okay, the corpus which they have recommended for creation of shared data and computer infrastructure as public good. That is quite a thoughtful idea here. How that is will be possible, and I think we have to see how it can actually really come off the ground. That we need to be debating a lot on that. AI standing committee, FinSector, AI Safety Institute. These are all normal things which can be easily be done. And then AI Finance Award and I think like IBA and other kind of FICCI. So many people will automatically be picking up this. Because every year they do encourage different type of performance recognition methods. Now it will become a very easy idea to pick up. So that's a simple recommendation. Then AI repository, which we talked about, internal one also and external one also. The repository is to be available for both sides. Then yeah, that's so these are the recommendations that we have to wait for the actual promulgation of these recommendations in as regulation by the Reserve Bank. Hopefully, it should be because by and large, I don't see much of hesitation from the Reserve Bank side, except for that single one. There also, as a testing, as a starter, the Reserve Bank should be accepting it. So hopefully, the whole sector, both the tech side and the banking side, should be able to make good use of these recommendations and make appropriate use of the new technology that is coming. Thank you for that.